Good morning, and thank you for spending this next 30 minutes with me. We're going to be studying again our entries. When we look at the chart, when it's a good time to enter, and when is a good time to exit. And keep in mind, we always look at what the loss would be if a trade goes against us. And if that's something that we can accept, and we talked about money management in one of the earlier videos, so if that's acceptable, then we can look at what the potential for gains are. And if we are satisfied with that ratio, then we take the trade. Again, please take a moment and read this legal notice and keep in mind that everything we discuss here is for educational purposes only. And education is the key for anything that we want to do in life and be successful at it. And and then what we do, we study charts, we study how the market is behaving in the past. And then from that, sorry, we get some ideas of how it may behave in the future, but it may or may not do the same thing. And so then you need to be aware of the risk you're taking because trading in the stock market or futures or options or forex, what have you, they have a lot of potential for gain, but also potential for loss. And that's why we encourage you to paper trade, study and paper trade. And when you are about 70% successful, then that's a good time to start trading with live money. And when you do that, I encourage you to start with a small money that you can actually lose because you're going to see that emotions kick in. And that's why what we wanted to do is that to create for you a personal successful trading plan and that you would basically trade off of that plan mechanically as if your computer was doing all the work for you. And and then we encourage you that over time, as you paper trade, keep track of your learning curve. Keep a diary, a journal, and writing if you follow the rules. You know, have the rules clear. And it's the rules we're going to be discussing in a minute. Have them write written down, and then check to see if you following those rules, and then and then the results. Write the results. If you went against you, or if you went your way, then you want to know exactly how that's working out, and then over time, then you begin to see there is a probability on your side if you follow in the rules. And based on our experience, we have a good 70% plus chance of success the way we trade based on this education. So let's get started. Excuse me. Uh, so now let's review what we've been discussing so far. And we talk about that, first we're going to select a number of really great stocks. We don't want to have too many stocks. We want to get to know the patterns the stocks create. And so when you have about a handful of stocks you look at, then over time you begin to know them. And also these are the stocks on a monthly chart. Remember we talk about these candles. This is a 1 month of a candle. And and so this is the monthly chart here, and each candle represents 1 month. We want the overall picture of that be very strong uptrend. So here it just shows part of this, but if you look at this, you'll see overall it's a very strong stock that we're using. And then as you can see, market waves, what we call waves, they start at high point, comes to lower point, goes higher, lower than this point, and then comes break this and creates a lower point. And this is what we call a downtrend. Or if it goes the other way here, for example, started here, went up to this point here, had this small retracement, then broke this. This becomes a higher point than this one. This is a lower high than this one, and this is an uptrend. So that's the first thing we need to understand, the market waves. It doesn't matter what chart you look at. For example, this one here is a daily chart. So Here we have a high point here. And remember, we talk about high points and low points. When there's a candle reaches a high point, and then there are at least two candles on each side, lower than this point, this becomes a high point. Or here you have a low point. When you have at least two candles each side higher than this point here, then now you have a low point. Or you can call this a resistance, a support point, and up here will come a resistance point. Or we call them diffractals, and we see this color also is green and pink. Now, sometimes please pay attention. It may not show the fractal, so it's good to notice them. If they're the two candles next to each other here are equal, for example, you may not see a fractal like here. If you notice here, this is a high point, but then for some, it looks like they're about the same, but for some reason it's not showing it. So you need to pay attention to that, but it's pretty simple. You know, if you have at least two candles equal or lower than this high point, that becomes a high point. Low point is you have at least two candles on each side. Higher than this point, you have a low point. And then again, the trend, uptrend is, you know, you have a low point, creates a high point, retraces, creates another low point, but this low point is higher than this low point here. And then when it goes and breaks this high point here, then now you have an uptrend. Remember, we call this A, we call this B, we call this C. And as soon as it breaks this, you have an uptrend, but then eventually this will go at some point, what we call D, and then it retraces again and continues this. And the same thing for downtrend. As you can see, it comes down here. This becomes an A point. This becomes a B point, goes back up to a certain place, C point, comes down. As soon as break this, this is a downtrend. And then, but it comes to some point we'll call D, that's our target, by the way, and then it continues this downward to start going back up again. So you need to become really clear about what a downtrend and uptrend is. So when you look at your chart, right away you can see what's going on. So if you look at the monthly, for example, here, you can see this. We have a high point here. We have a low point here. So what happens, remember, the market can go through this up and down as long as he wants. Sometimes they come very quickly, sometimes they go slowly. But if he breaks this point, now we have a downtrend, and it's a good chance it may go lower. But if it comes back up and breaks this high, it may go higher. But then we're looking at the monthly, we see we are at, you know, between 1 and 2 standard deviation. So the probability is that it's going to come down, but there's no guarantee. So then you look at weekly, the same thing. You see here, we've come down here to 1 and 2 standard deviation. Is back down here at 2 standard deviation. So the probability is going to go higher, but again, there's no guarantee. So here we have a low point, here we have a high point, and it can go through this back and forth till either breaks down lower or breaks higher. You know, so if this is going to come lower, it's not going to come down all one time, but it's going to have some retracements and then go lower. And that retracement, then you begin to see it on the weekly. So like here, came down, went up, came further down, went up, came further down. And what we look for to trade is once we have 1 standard to a standard deviation, come on daily, you know, this is our setup. Okay, monthly is our direction. Then we come on daily for our trigger, when to get in. And that's what we're going to discuss now more in detail. But first, I wanted to get a good feel for our setups and what we look for. And then, once we are ready, then, we're going to look for a setup to trade in. And so, again, we talked about there are 3 entries, aggressive, moderate, and conservative. So let's discuss those again. So again, if the monthly had a nice uptrend, and then it comes down, This we'll look at on the weekly. So on the weekly, we're at -1 or 2 standard deviation. Uh, and then on a daily, we try to look for setup. So let's see what we see here. So on the daily, then market has come down here, and then what we want here, as soon as we make a low point here, so we wait for it to have at least a low point. All right. Now some people like to get in right at this point. They want to capture as much as they can of this uh, change of direction possible. Remember, we talked about this. If market goes from this point here to this point here, maximum, we don't want to try get all of this, but we are happy to get maybe 50% of this. We don't have to get all the 25% on top, all the 25% on the bottom. And that's why we want to wait to see, we have a nice trend. But some people are aggressive. They want to come and say, okay, how soon can I get in here? And, we may talk about some of this in the future, like a bullish candle might be a good beginning point. And we have other ways to look at that as well. We'll discuss it maybe next time. But the point is that this here is aggressive. It may go back up, and sometimes they go back 3 days, 5 days, 7 days. If this has been coming down a lot, this has a good chance to, it's like hitting a ball on the ground. If there's a lot of force coming down, this can go back up. But then at some point, it's going to retrace. People are going to take profits, and we create the B point. That means we have at least 2 candles on each side. And then again, this can come down a little bit, can come down a lot, can go back and forth a lot, but at some point it's going to create a C. So some people like to get into trade at this time. We call this moderate. Now, the first one, A, this is aggressive. I call it also reversal trades because we want to get in right here at reversal. This one here I call also continuation trade because if the trend has started here, then this is a good point to get in, especially once you have an uptrend and comes back down the second, third time. This is really great entry. So this is more moderate, and I suggest for now even don't worry about this trade. But the ones that we're interested in is that when the market comes and breaks the B. At this point here, you can either enter right at the point it breaks here, or wait till it closes above here, and then if the next day is going higher, then you go higher with it. And that's what I call conservative or a breakout trade, because it's breaking out through this area that may be going back and forth. And when that happens, the longer, by the way, this goes back and forth, the more energy it creates. And if you ever look at the days, like so, let's say go around 19, 20 days or more, you're going to see it's going to have explosion. Either way, the chances are may go higher. And so then, remember then, on the monthly, we want a nice trend. On the weekly, we want to come down here to 1 or 2 standard deviation here. This is oversold. On the day then is our entry. Then at some point it's going to turn around and create an A point or a low point. Remember low point, 2 candles on each side, and creates a B point. And B point is again retracement here, and may go back and forth many times. It finally creates a C. That's the point it's going to turn around. And then when it comes and breaks the B point here and it closes, these are daily charts, so you can look at it, when you get home at night or have a few minutes free during the day. I would suggest do it at night so you can see the day is finished. The market closes at 4 o'clock every day. And then for the next day, you can put a buy order here, for example, and then if he breaks it, it goes your way. And if it doesn't, there's a good chance he may go and turn around and go back your way later. Okay? So I also thought I'd share with you about this book. It's a great little book called The Turtles. And here is actually a true story about 2 professional traders had a discussion of who can be a good trader. And one of them was thinking that it takes a certain type of a people with a certain type of a mindset that can really become professional traders or successful traders. And the other was thinking, no, we can teach anyone to become a trader, and that's my feeling as well. Anyone can learn this. And so they had a bet. They both hired a certain number of people that fit their criteria, and taught them exactly how to trade and give them money. And some of them became very successful. Some of them lost the money. And they realized the one, doesn't matter which group he was, the one who followed the rules, they are the ones who were successful. And those who did not follow the rules, those are the ones who lost money. So basically, one of the rules was that if you want to get into a trade, then you start with a relatively smart position. So let's say you want to buy 100 shares, maybe the first one is 25 shares. And then once you have confirmation of a trend, so this would be like the aggressive, market has really dropped down to 1 or 2 standard deviation on the weekly, on the daily. Say, hey, this looks really good. I want to get in. Maybe there was a green day or something, and you say, okay, I want to get in. Then you only put in 25 shares here, 25% of your total amount. Now, if it goes against you, you can wait, right? It's not you're not risking a lot. These are great stocks. That it's already oversold, and so you wait for it. So maybe then once you have a confirmation of a trend, so remember A to B, and then breaks the B here, then you get, you put in another maybe 25 shares. And so now, you're getting now you have 50 shares. Now, at that time, you also begin to notice the volume increases. So when, you know, professional people come in, you see here shows a higher volume than normal. And we're going to talk about volume another time, but for right now, I just want you to really get good in understanding entry and exit positions. And we add other confirmations to it to make it even more successful. Uh, and so anyway, then also by breaking key technical lines. So technical lines basically support resistance. So here, for example, here's a resistance point that we called B. So when market comes and breaks that point, and you see high volume here, that's a great time to get in. And so then as you understand what we call technical analysis, as you understand how to look at charts, which, we try and make it as simple as possible, that is successful as well, then you're able to make better trades. Now, they also say you raise your stop loss. That means, remember, this is very important. So if this is a first A point here, and the market goes up here, makes a B, and it retraces to C, and it breaks it here, where is your stop loss? Your stop loss really should be at A point here. If you want to be really, you don't want to risk that much, then you can put the risk behind C. But a lot of times you can see market comes back down, may go lower, and then go back up higher. So I encourage you in the beginning, when you first get in a trade, your stop loss should be below A and keep it there. But then as it goes your way, you can move the stop loss to the C. So every time, we have A, we have B, we have C, we have D, then this starts a new trend, then your stop loss, this A becomes this A, and this B becomes this B here, and this old C now is A. Now this we have a new C, and it may go higher. And it may continue this. And so every time you have a gain, you want to move this higher. Now some people like to also lock in the gains day by day, for example. We'll show you how you can do that. But the point is that if the market goes your way, you want to avoid losing money at that point. And then you lock in your gains as the market moves your way. So these are, really great, good rules of trading or tips of trading, however you like to call it. And so I encourage you to keep this in mind. And so then we're going to look at some charts again. And then please keep in mind, I really encourage you, after you study these videos, if you have any questions, email me. You can email me to swingtrade-to-financial-freedom@gmail.com. And on Sunday nights, this is the totally free webinar between 8 to 9 p.m. Eastern Time. You're welcome to come online. I'll send you a link. And then we can discuss your questions. And that way, hopefully you get a better feel for what we're discussing. And so now let's look at our charts and see if we notice the same things now in our chart. Okay, so I've opened again a demo chart here with Thinkorswim. Again, I'm not affiliated with them, but it's a really great chart in software. With this, you have free feed if you want to look at futures, stocks, options, forex. It's really wonderful. And so then the first thing I always like to look at is the future market, the Standard Poor's 500. And you can see here, this is what we call a future simple /ES. Will show you exactly what future ES is doing. This is the Standard Poor's 500. And almost 75% of all the stocks go in the same direction with Standard Poor's 500. So if I was going to buy something, I want to see the market is moving in my way. It's like, if you on a river and you're canoeing, you want to go in the direction of the stream, not against it. So that's the first thing I would look at here. But also, let's just study a little bit further, and this is something we're going to do every week, so we can see what the market is doing, and that would help us to know also how to trade. So let's look at the monthly here. Let's open it further. All right. So if you look at it closely, you can see it create a high point here, and as you can see, about 6 months ago, it dropped onto this point here. Okay. So now, because we have a high point here and a low point here, that's our A, and this is our B. Now, you can see here, this is B because we had 2 months the market went higher, and but then again, it can do anything it wants in this range. It may go fast like it did here. It's just been going up straight up last 4 months. But now, if it comes and breaks this high point and goes above it and creates a higher point here, market is still going higher. We still have an uptrend. But if we cannot do that, because now we are, I can see here at 1.5 standard deviations, pretty much overbought. But again, there's no guarantee it's going to drop. And so if he doesn't break and go higher and comes back, now we still have this ranging situation here. But of course, you can see this is quite of a distance. And then if we close below here, then we may have a good chance to go further lower and become a downtrend. So we want to keep that in mind as we look at this every week. And then if we look at the weekly, you can see the same thing. It's getting back now. As you can see, this is the high point here to 947. We're almost there. And also, you can notice here, when it came down here, it created an A. Now, do we see a B here? See, I don't have a B yet. So where is the B? We don't have a B yet. And so that means, and this is going on for 4 months. It's pretty straight up. And so my guess is that then people are going to start taking profits, and this should come down at least for 2 weeks to create a B up here. And then we're looking for a C, and then we'll see if we continue going back up or come back down and go lower. So my guess is that there's a more probability for market to come down and create a B there. Now let's also look at charts on a daily charts. And now as you can see here also, we can see we have the high point here. What's nice about Thinkorswim, it marks them for you. And you see it's been going up straight up this line here, has some retracements here. Now here you can see you have a point here, So this is an A point. So he came up here and created a B point here. You can see that. Came down here, created a C point. So this is A to B, this is the C. You know, it went sideways here for a few days. Then he broke this here. And this is where we want to get in the trade. So he broke it here and closed higher here. So when the market start going higher than this point, you could have got in, you know, had some retracements. And the chances are, you know, A, B, C, this is our A, that this becomes our D at this point here. Now this becomes our new A. This becomes our new B. And then we had a small retrace here, but we do have a lower point here. And this may as well go higher to D. You know, we'll find out. And so then, you know, I want to introduce something to you how we measure D. And this is a really wonderful tool I'm going to discuss with you. And it's called Fibonacci Extensions and Retracements. Now, I'm not going to discuss Fibonacci, you know, what they are exactly here, but basically Fibonacci numbers are reflected in nature all over. And you can Google that, study it, and if you want to discuss it more, then please come online. We can discuss it more. But also in trading, also we can see energy. You know, it's following the same patterns that Fibonacci numbers tell us. And so then here's a wonderful tool. If you come to drawings here, see drawings here, and then you go right here, come down here. This first one is a retracement. The second one is the extension. So let's use the extension right now to get an idea of our target. So if I come from this beginning point here, I left click it here, bring it up to B, left click it, bring it down to C, left click it. Now, it shows me I have different numbers on here, and you know, this one is 100%, 100%. That means that, and this happens quite often. So this distance from A to B, if you measure it and you bring it back from here, the same distance you bring it up, it comes right here to this 100%. And a lot of times, and more than 70%, you see when the market has a retracement, they're going to go this distance back higher from that point. So that would be probably the first thing I would look at for my exit point or for my profit target. As you can see, it's come down to it, and now it's going sideways. And then the next one is an important Fibonacci number is 127. And here, on 127, then also you'll see about 70% of times this market comes to it. So then I'm expecting this now comes to 127. Now, at any time it reaches a certain level, this becomes like a support resistance area. So at 100% is a resistance area, and at 127 is a resistance area. So it may go sideways, it may be rejected, come down, or it may hit it and go higher. And so then we want to keep an eye on this. And right now, my feel is that it's going to go to 127. And then at that point here, if the market is strong, it could even go to 161.8. And this is, by the way, called the golden ratio. And these numbers, like I said, they're very popular with people who use Fibonacci numbers, Fibonacci for trading purposes. So this is how we begin to see where our targets are. And we're going to discuss this now more and more. So our target right now then is this one here, based of this pattern. And so then, having said that, then let's go look at some charts and see what we can discover. Let's look at here at Amgen. All right. And now, if you don't know, you know, like I said, these stocks are really great stocks that we've picked for you. And look at the monthly, you know, how wonderful it is. But if you don't know what a stock is, you can come here, see this little arrow here. This opens it up This is my watch list right now I've created. And then if you go here, it says my watch list and click on that. And then it says edit my watch list here. And then here you can come and read what the name of each stock is, for example. And so here, Amgen, there we go. How come I don't see Amgen here? Okay, so here's Amgen Incorporated here. Also added UUP. This is the US dollar index, can actually be traded, but we look at that when we talk more about Forex. So anyway, so you can create yourself a list here, and it's very simple. And then you can just click on them and this comes out, or you can just put the symbols up here. So on Amgen, then when you look at this here, what do you see? You see it's been going back and forth through this area from one standard deviation to the mean here. Remember we call this the mean average price. This is overbought, this is oversold. And also, you can start practicing using your different tools that's available to you. For example, here where it comes to drawings, and you see here it says drawing this line here. This is what we call a trend line. So, for example, if you come here and you go from this high point to this high point, for example, you create a line for you. If you click on it, duplicate it, and bring it lower, and you can, decide where to put it, where you see most of these candles are in there. Now you can see a channel here. So this is doing a channel trading. And it's going up to this line and then coming down, and then it comes down here, goes back up. And you can see it's an uptrend, but then it retraces down and goes back up. So then this tells me there's a good chance it may come further down here. But again, these are all monthly. So through a month, then, this can go higher and lower. And that's where we come to do swing trading. So then now if you come and look at the weekly chart, and sure enough, we can see we are now at 2 standard deviation. And you can also notice here, we have a low point here, low point here, low point here, low point here. And every time come this area, looks like it wants to go back up. And we had this whole week, that market has been positive here, green here, and on Friday went up 99 cents. And then we come and look at our daily, and we could have started looking at daily as soon as we got to this point. And now what do we see on our daily? See, now here you can notice that we do create a low point here. Market was coming down pretty strong. Then we had a indecision candle, and you can see the tail. It came down and went back up. This is a bullish signal. And then we had a bullish candle here. So this is a very bullish, strong candlestick formation. So, later on when you get some practice, you may say, okay, I may want to get in the market at this point. I may want to get in the market at this point. But again, if we do that, that's aggressive. We're going to do with a small amount of shares. And then we know that market is going to wave. So it has created an A here, but has it created a B yet? So this is our A point down here, right? Now, we have at least 2 candles on each side, but we're waiting for a B point here. So we don't have a B point yet. That means we don't have 2 days minimum retracement. And so then we're waiting for this. I may go higher, but we know it's eventually it's going to come down. So we wait for that. And then once it creates a C, again, some people like to trade here. We'll call this a more moderate or continuation trade. This here more aggressive. But then it will go back up again and breaks this B point here, and this is where we want to get in. This is our momentum trade, our breakout trade, because it's created energy here. And so then this becomes part of our watch list. And we can, go through our charts on the weekend for a few minutes. And, it's very simple. We'll do that. And then the ones have come down here, we want to go back up. We put on our watch list waiting for this to happen. And right now, of course, this has not created the B, so you can look at this, by Wednesday and see what's going on. So the next one we're going to look at here is MDT. This is called Medtronic Company. And again, if you look at the monthly chart, I'm always trying to get as much information I can from every chart, starting with the month. You can see we have a nice trend going up, and then also see has nice retracements and goes back up. So we have another retracement here, and again, you notice that we have an A point on a monthly, right? And we also have a B point. So is this our C point? I don't know yet. Why? Because we don't know the C point till it comes and breaks the B, go further down, because this can go back and forth, can go higher and then come down. And if it comes back and breaks and closes above this high point, we're back in the uptrend. But if it comes down and breaks and closes below the B point, now we have a downtrend on the monthly. And that becomes very important to notice your monthly is really creating the trend. And the weekly and daily and small time frames are really responding to the monthly. And so then on the weekly then now, we come and look at that and we'll see, we have to start deviation. And you can see here, MDT, just like Amgen, had a very nice, strong week here. And again, we're going to discuss candlesticks another time. But look at here. This week completely enclosed this here. This is called the bullish engulfing. And I'd rather teach you these things as we see them on the charts. So hopefully makes it easier to remember. So this is a very strong candlestick formation. So my guess is next week, this is going to continue going higher. Again, no guarantee, but it gives us the higher probability that's what's going to happen. Now, if you look at daily now, you'll see that we have an A point here. So this is our low point or A point here. And you can see it was pretty strong last week, 5 days, went straight up. Now here you can see a gap here. There's a gap here. When you see a gap, that means before market opened or after market closed, there was some activity and people showed interest and bought this. So again, this also shows me this was pretty strong. So if I was looking at this on this day here and I saw that, that would have told me the market is going to go higher. So for those who want to be aggressive, then they need to understand the candlestick formations really nicely, and then that would allow them to get in faster. But again, for a new person, I encourage you to stay with a momentum trade when it breaks the B. So now here, it is possible to go higher, but at some point it has to create B and come down. So again, this is our watch list to see what's going to happen. And then when it comes back and breaks D, that's where we want to get in. And now at that point, then we'll look at this every week and see what we're going to have in the coming weeks. The next one we're going to look at is Merck. Now we always start with the monthly. And so we look at the monthly chart here. Again, you see you have a really nice uptrend. Market is going higher. And also then you notice that here market went sideways for a long time. Then you see broke this high point and took off. And that's what I refer to. When market goes sideways, especially the more it does that, the more energy it builds. And once it breaks this area, you see how much it went further higher. And so these are good things to notice. Now we see on a monthly, 1 or 2 standard deviation. And look at here, strong drop this whole month. But also, as you can see, it came all the way down here, but it went back up. That means what? That means sellers pushed it down here, but buyers bought it back up here. So It shows some strength going back up, but of course this fight continues between buyers and sellers. So now we come and look at the weekly. Okay, we see that basically goes around this here. Now is one standard deviation done, and also you can see here I had a strong week here, and now this one here is also a bullish candle. You see here it comes more than halfway here. So anytime the you have a big red down and the green one goes at least halfway of this candle, this is great too. This is called a bullish piercing candle. This is a strong candlestick formation here, and and then there's a good chance might continue going higher. So let's look at the daily. And then again, you see here we had the low point. We have don't have a high point yet. So then this may continue going higher because of this week, or may come down and then go back higher. Okay, so I hope this video was beneficial to you. Sorry it went over 30 minutes, about 40 minutes. But it's a really important video that you should really watch over and over again. If you have any questions, please ask me. And we're going to look at this again next week. So I hope you join me. And meanwhile, have a great day. Take care.